Welcome back, investors. My name is Jeff. In today's video, we're going to talk about Aurora Cannabis. They had some news hit over the weekend. I want to get into that. I want to kind of stretch this video over a 2-day period because I am curious to see if the stock is going to have any fierce reaction to this news. So let's just do a little rewind here. Let's go back 1 year in time. Aurora came out of those December lows and ran hard into these March 17th highs where ACB was trading itself up over $10. The future was very, very bright and an overhyped market. I think really coupled with earnings that did not live up to analyst estimates. So I'm not going to say ACB has bad earnings. That's not correct. They are burning through their cash flow very, very fast. They spend far too much cash, and the earnings just did not live up to what analysts thought was possible. That's why you've seen, ACB basically trade from $10 down to $2, and it really looks poised, from the chart pattern to go lower. So what I always tell my students, what I always tell people is try to find the reversal before you buy in, right? Because predicting the bottom is very, very difficult. If I'm going to say, okay, here at $2, I'm saying the bottom is in on ACB, this chart pattern is not giving me any information that would tell me the bottom is in. Simply because I'm not seeing any kind of trend reversal. I'm not seeing a big spike in volume, and I'm not seeing the chart over any amount of days moving in a bullish direction. It still continues to trade down. Even when you get these little spikes, when it comes out of the $4 to $5 range, trades up to $6. I think a lot of people want to ride that. But as you can see, the past year has not been good to ACB or Canopy Growth or Kronos Group. Let's pull up Canopy Growth's chart and take a look at that as well. And it is a very, very similar pattern, okay? Now, Canopy Growth actually seen its 1-year high on the 28th of April, so it was extended a little bit longer. But now Canopy Growth going from $52 down to under $20, traded all the way down to $14 at one time. Now you could say that it does appear like there is a short-term reversal going on here from the end of November going into the last couple days of December. So the next thing you do want to think about is 2020 going to be the year where these companies start bolting back forward, okay? I think the general consensus opinion is that the market caps on these companies are too high for their level of earnings. And I also want to mention this, when they all came and enlisted on the American exchange last year, so ACB, Canopy Growth, all these different companies listed on American exchanges over the past, let's say, 2.5 years. One of the problems, I think, is that a lot of people think that the growth in these stocks was organic, where it was mostly institutions coming in buying these stocks to hold them up, but it was not earnings driven, okay? So when something is not earnings driven, you're really opening the door for bad fundamentals to come in, the stock to trade off. And unfortunately, that's why we are looking at chart patterns like this now, instead of what we've seen at the end of 2018 and the start of 2019. So let's get into the news about Aurora Cannabis that hit over this weekend. But real quick first, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. And so I'm over here on the Aurora website, and they announced a change to their executive team, and that Cam Battley has stepped down as Chief Corporate Officer. That is effective December 20th, 2019. He joined Aurora in 2016, serving a number of senior roles critical to the success of the company in its early years. Before being named Chief Corporate Officer in 2018, Mr. Battley has been instrumental in Aurora's international growth, serving as a powerful advocate and corporate voice in support of global acceptance. So this is something I've noticed a lot. There is a lot of turnover in the upper management in some of these MJ companies. You're seeing it a lot with Canopy Growth. Now you're seeing it with Aurora. These positions are quite difficult to manage. I think the pressure is on from American analysts, and these companies cannot push out the earnings that they need. And so you have to start forcing people out and trying to generate different people to come in, okay? It's just the unfortunate nature of this business. But I hope Cam Battley does well while he is departed from Aurora. He has been appointed to MedRelief Australia's board. That happened in November of 2019. So this appointment has been approved by Australia's Federal Office of Drug Control. MedRelief Australia, that is a privately held medical cannabis company established in 2016. It's fully licensed to cultivate, manufacture, import, and sell medical cannabis. Aurora actually holds a 10% stake as well as a 50% of the voting rights in MedRelief Australia. So he's still kind of staying in the family. And so I do not want investors to think that this is necessarily a bad thing. This is something that is going to make the situation that much better or that much worse. So like I said, I'm going to try to capture some of the stock movement tomorrow, and that's where I will turn the camera back on. We can take a look at this tomorrow and maybe just try to gauge some of the reaction from the public. Aurora lost 10% today, almost 11%. Then it bumped up 3 cents after hours. It's trading down to $2.04. If you do feel trapped, you feel like you have over-invested yourself or you've bought too many options in the cannabis market, I think most people, what they suffer from is just a general lack of diversity. And I do see people buying in too much too fast. Okay, so if somebody gets a large lump sum of money, they just want to dump it all in the stock market at one time, where you need to be layering in. Especially during 2019, we made high after high on all of the indexes. You need to be a part of many different sectors. So if you need some help with investing, you want to understand it better, you want to improve your techniques and become a better overall trader, make sure to check out my course, Trade Alerts Pro, where I make time for all students and give a lot of one-on-one mentorship. I also alert daily and weekly stock alerts. I alert usually at least 2 trade alerts every day. Getting back to this, Aurora lost 10.67% during the trading hours. I was very surprised by this. I did not think the stock would have this big of a reaction to the departure of Cam Battley, but it sure did. This equity went from a bad situation to worse. I think the public did view this as something that's going to hurt the company further. And when you see 10% trade off of a stock, you can say this is a lot of institutional dumping. A lot of hedge funds maybe holding ACB have lowered their exposure to the stock. I don't know. We're going to have to see what all comes out over the next couple of days. Started the day up here, right at open around $2.17, $2.18. That's when I started watching it. And then boom, it dipped down to $2.04 and $2.05, traded itself back up to around $2.08, and then just flatlined. Did not see any buying volume come in to pick this stock back up. And wait, there is more. Okay, so Jefferies came out, downgraded ACB to hold from buy following this news. That actually happened today. Their analyst Owen Bennett mentioned, it is clear to us that the market is lacking conviction in Aurora, and this update will do little to help that. He wrote in a note to clients as he lowered his stock price target to $3 from $7. Of course, that also goes on to say Aurora shares have lost 24% of their value in the past month, battered by negative sell-side reports. And that is very, very true. I have seen this big wave of analysts come in to be very bullish on ACB back in early 2019 and by the middle of the year, and now most of those are either neutral or negative on ACB. That has a lot to do with it because a lot of institutions do take their buy and sell signals from Bank of America, Jefferies, Deutsche Bank, JP Morgan Chase. A lot of these big investment firms, anytime they make a change, a lot of people with lots of money are going to make moves based on that. Also, the controversial convertible bond exchange that was highly dilutive for shareholders, and news that director Jason Dick had sold more than 1 million of his shares, which is equal to 57% of his holdings. So it's bad news after bad news right now. Let me propose a question though, just a little thought to send you off with. Should you completely just walk away from the MJ market? Should you just completely get out of these stocks and forget that they have all happened and have no exposure to these stocks at all? I think that would also be a great mistake. Of course, I do encourage you to be a lot better diversified, not so heavily just in these stocks. You should be invested in a lot of different stocks because most of the high growth tech companies are hitting all-time highs, and so those of us who hold, we're just seeing our price per share go up and up higher. But I think to completely walk away from this industry and not even look at it anymore, not even keep an eye on the watch list and check on it occasionally and keep up with earnings, I think that is also a big mistake because you never know when the bottom will set in on some of these stocks and they will be an appropriate time to buy. But for now, is very, very bearish, and we're just going to have to watch these charts and chart patterns and keep up with everything. Try to find a place where the bottom has set in. So that's all I got for the video, guys. Make sure to go down to the comments and share your thoughts with me. I'd be more than happy to hear them. Thank you as always for watching the video, and have a great day.